Good morning and welcome to this week's PFL podcast. I'm Curtis Chandler and we have a lot to report on. Last week, we were watching the SPR drawdown, Hermad's, Cenovus going public on Ottawa, record butane exports, and the STP's new Class 1 service matrix. Stocks closed higher across the board on Friday of last week and finished the week in the green. Full numbers are in today's report. In overnight trading, Dow futures traded lower and are expected to close down 26 points from Friday's close. On crude, WTI closed at $95.42 per barrel on Friday of last week, which was down $6.52 per barrel week over week. WTI is poised to open at $97.69 per barrel, up $2.27 per barrel from Friday's close. Oil inventories. U.S. commercial crude stocks fell 2.3 million barrels week over week. Total commercial petroleum stocks fell 5.9 million barrels week over week. Full breakdown of all inventory numbers are available in today's report. On the rails, Total North American rail volumes were up 3.37% in week 19. 11 of AR's major traffic categories posted year-over-year increases. Grain was up 14.93%, and forest products were down 12.25%. On the rigs, total North American rig count were up 2 rigs week over week. The U.S. added 1 rig week over week, now sits at 548 rigs, down 30 rigs year over year. Canada also added 1 rig and has 124 active rigs, which is up 10 rigs year over year. Here's the latest stories we were watching out there for you. The Strategic Petroleum Reserve has drawn down to 392.7 million barrels as of May 1st, a release of roughly 542,000 barrels per day on Hormuz. But at the current pace, we don't run out of crude until sometime in 2028. See PFL's rail report for further details on that one. Next, Cenovus CEO used last Thursday earnings call to take a direct aim at Carney's government, calling Ottawa's focus on climate policy monoptic. Rare language from a sitting oil chief. Canadian Natural Resources is feeling the same drift, deferring its capital budget by $310 million. But if Ottawa keeps stalling, rail may have to backfill missing pipe. On Enbridge, the main line moved 3.17 million barrels per day in the first quarter, the highest since 2023, and the company rejected 14% of heavy crude nominations for the month of May. The Canadian Energy Regulator did approve a small expansion on Southern Lights pipeline that moves diluent from the U.S. to Canada to put into heavy crude so it can move on pipelines. Gibson is postponing its diluent recovery expansion, concentrating on adding more tank storage, an indicator that crude by rail is the last resort for Canadian producers at this point in time. But if Ottawa keeps stalling, rail may have to backfill missing pipe. We'll wait and see on that one. On the butane side, U.S. exports hit an all-time monthly high of 689,000 barrels per day in April, with Mount Belvieu pricing at a 15-month high. Hormuz is trapping roughly 30% of global LPG supply, and Asian buyers have pivoted hard to U.S. butane. Pressure car demand and midstream we're seeing it. On the regulatory front, the STB finalized rules on Friday of last week requiring the Class 1 railroads to publish 2 new weekly service matrix starting July 1st. Estimated arrival accuracy on manifest service and spots and pulls. Unit car trains and intermodal are exempt, a meaningful win for shippers and a real check on the Class 1 service. And on the UP-NS merger, the comment window is closed and the carriers respond by tomorrow, May 12th. UP has signaled that it will tolerate up to $750 billion in STB imposed conditions before walking away from its $2.5 billion break fee with the NS. PFL is your one-stop shop for all things. We provide storage, leasing, subleasing, car cleaning, repair, flaring, scrapping, nitrogen generation, and transloading services across North America. If you found today's report useful, please share it with a friend or colleague. Thanks for listening to this podcast, and make sure you read today's report, and good luck out there, folks. Looks like it's going to be another volatile week, and most of all, be safe and give us a call on the desk to troubleshoot anytime at 239-390-2885.